You've been paying your bills on time for 2 years, every single month. No late payments, no collections, nothing. And you go to apply for a mortgage or a car loan, and the lender looks at you and says your rate is going to be 9.4%. And you're sitting there thinking, wait, I did everything right. What is going on? Here's the thing. You did do everything right. The problem is, everything right according to who? Because the advice most people get about credit scores isn't wrong exactly, it's just incomplete. And that incomplete advice happens to keep you in a higher interest rate bracket, which is very, very good for lenders. My name is Frank, and I spend way too much time thinking about credit systems and how the average person gets left behind them. If you're someone who's been playing by the rules and still can't figure out why your score isn't moving the way it should, make sure to hit that subscribe button and give this video a thumbs up if it helps you out. Look, the standard advice is pay on time, don't carry too much debt, wait. That's it. That's what most people are told. And don't get me wrong, those things matter, but there's a reason that advice is everywhere and nobody's talking about what we're going to cover today. The credit scoring model is a system, and like any system, it has specific mechanics. Mechanics that if you understand them, you can work with instead of against. These aren't hacks, they're not loopholes in a shady sense. They're legitimate features of how FICO scoring actually works. Banks just don't send you a pamphlet explaining them. Strategy 1. Authorized user trade lines. Here's what most people don't realize. Your credit score is built from your credit file, but your credit file doesn't have to only contain accounts you opened. If someone adds you as an authorized user on their credit card, a card that's, say, 8 years old, never missed a payment, and sits at 10% utilization, that entire account history can show up on your credit report immediately. Think about what that does. Your average account age jumps, your available credit increases, your utilization drops. 3 of the biggest scoring factors, all in one move. A woman named Patricia used exactly this strategy. She was sitting at a 581. 93 days later, she was at 721, 140 points. She didn't pay off massive debt. She didn't wait years. She got added to a family member's old account and let the math do the work. Now, you might be thinking, okay, but I don't have someone willing to do that for me. And that's fair, but this is worth having that conversation with a parent, a spouse, a sibling. You don't even need access to the card. You just need to be on the account. Strategy 2. Utilization timing. This one gets really interesting, and this one genuinely frustrates me that nobody explains it clearly. Your credit utilization, which makes up about 30% of your FICO score, is reported to the bureaus on your statement closing date. Not your due date, not when you pay, the closing date. So, here's the scenario. You have a $5,000 limit, you spent $2,000 this month, normal stuff, groceries, gas, whatever. Your utilization is 40%. That 40% is what gets reported. Even if you pay it off in full on your due date, the damage to your score already happened. But if you pay that balance down before your statement closes, you might report 4% utilization instead of 40%. That is a completely different credit profile. Same spending habits, completely different outcome. Call your card issuer, ask them what your statement closing date is, set a reminder, pay before that date. This single adjustment can move your score noticeably within one billing cycle. Strategy 3. Credit limit increases. Here's a quick one that most people overlook. Many credit card companies will approve a credit limit increase with no hard inquiry on your credit report. No hard inquiry means no temporary score dip. You call, you ask, they run a soft pull, and if approved, your available credit goes up. Your utilization ratio goes down, and your score benefits. Takes about 10 minutes. Capital One, American Express, Discover, many of them have specific processes for soft pull increases. If your card issuer does require a hard inquiry, you can ask them directly before they run it. Strategy 4. Strategic account management.
Everyone says never close a credit card, and closing your oldest accounts is genuinely a bad idea. Keep those open forever, even if you barely use them. But here's the nuance. Closing a brand new account that's dragging down your average age, that math sometimes works in your favor. If your oldest account is 12 years old and you just opened 3 new accounts last year, your average age collapsed. Strategically closing those newer accounts after considering other factors can help stabilize your average age line. This isn't universal advice, but it's a lever most people don't know they have. Strategy 5. Rapid rescoring. This one is specifically for anyone getting ready to apply for a mortgage. Pay close attention. When you're in the mortgage process, your lender has access to something called rapid rescoring. If you pay down a balance, dispute an error, or make a positive change to your credit profile, your lender can submit documentation directly to the credit bureaus through a rapid rescore request. Instead of waiting 30 to 60 days for that change to reflect on your report, it can happen in 3 to 5 business days. This is a legitimate service. Most loan officers know about it. Most of them don't bring it up unless you ask. If you're in that window between pre-approval and closing and your score needs a small boost to hit the next rate tier, ask your loan officer about rapid rescoring. It could save you tens of thousands of dollars over the life of your loan. Look, none of this is secret information hidden in a vault somewhere. It's just not the information that gets shared loudly, because a financially optimized consumer is a less profitable consumer. When you're in that 620 bracket instead of 740, lenders make significantly more money off you over a lifetime of borrowing. Understanding how the system actually scores you isn't gaming anything, it's just doing your homework. Start with the utilization timing. That one costs nothing and can show results in 30 days. Then have the authorized user conversation with someone you trust. Then call your card issuer about a limit increase. Small moves, real results. That's how this works. If this helped you at all, the thumbs up means a lot. It tells the algorithm this is worth showing to people who need it.